Hi everyone, welcome. I would like to welcome my guest today, Giles Ellis. How are you, Giles?
Thank you. Very well, thank you.
Good, fantastic. Now today we're going to be talking about a subject that everyone really thinks a lot about, and that is reaching agreement on marital assets when you're going through the divorce and separation process. So Giles, you've got your own business, you're a chartered accountant and you own your own firm.
Yes.
Tell us more about what you do.
Well, I have had a very varied career as an accountant, lots of experience in many different things. And now I help clients with their financial and accounting problems. And more recently, I've begun to specialize working with you and helping some of your clients from an accounting and financial aspect.
Fantastic. So why is this such a big topic? You know, family businesses and divorce and separation. What are some of the issues there that people find themselves in the middle of?
Yes, well, obviously, any divorce is a very traumatic event, a lot of conflict, and can be very difficult. And one of the most challenging aspects of it is reaching financial agreement on the various assets that the couple have built up over their marriage or relationship. And so a key part of that is assigning values to the various assets. And quite often, especially in New Zealand, where there's such a large number of family-owned businesses, one of the largest assets can be an investment or ownership of a business.
Right, okay. So a lot of clients come to you because when there's a family business involved, usually what happens is there is a valuation or two valuations that are done in relation to the business. What are the key components of these business valuations that you deal with?
Okay, so typically for a business that is operational and it's running, there are kind of two components to make up your standard valuation. And professional valuers will use methodology. It's been, it's scientific. There is process behind it. But the two components really that are important are what we call future maintainable earnings. And so what the net profits you could reliably expect every year going forward, particularly under new ownership. So that's one aspect. And then how many years would you need to own this investment to recover your initial outlay? And so if we said it was 3 years, we'd call that a multiplier of 3, and we'd times that by the net profit. So to give you an idea, we have $100,000 profit this year in a business. We've looked at that profit, we decide it's fairly robust and we can expect the business to make 100 grand next year. We then look at other businesses that have sold that are similar. They have a typical valuation of 3, and so we apply a multiplier of 3, and we get a value for the business of $300,000.
Okay, so how do you work out what's fair when you've got two valuations, one that are quite substantially different, one from one spouse and one from the other spouse? How do you assess these, and when you get presented with two vastly different with a great wide?
Well, that's a very good question, because that's often where I do get called in. And so both parties will have sought their own valuations of most of the assets, including the business. And the business being the most tricky to value often means you can get very different valuations. And so just before I talked about future maintainable earnings, so there can be quite a matter of judgment in relation to what can and can't be included sometimes in those kind of revised profit and loss statements, if you like. And so I'm thinking here of where there's an owner who likes to do a lot of personal entertaining that he gets put through the business, we would adjust for that to get a revised profit and loss.
Okay.
The second piece is the multiplier. So professional valuers will have databases that they will refer to in terms of seeing what other businesses sold for, or they will use a matter of judgment. And the multiplier that's used can have a huge impact on the valuation of the business. For instance, a multiplier of 2 versus a multiplier of 4, you end up with a business that's worth twice as much as the original valuation. So it can be very confusing for a layman presented with two very complex reports, generally 30, 40, 50 pages long, full of graphs and numbers and complex language, to understand why they're being presented with such different valuations on what is the same business.
Right, okay, all right. So have you got any case studies that you'd like to share?
Yes, well, just to kind of finish up, I guess what we were saying before, is you are presented with these two very different valuations. what's the next step? I mean, how do you find agreement? I mean, ultimately, you've got two parties in a room, and really, subject to any kind of ongoing payment streams, you're trying to reach agreement on a total number. The business valuation will just be one piece of that. And so there's always room for compromise between those valuations, and it may give you some leverage to then negotiate in other areas, such as the value of the home or value of other assets. So, just a case study you referred to. Recently dealt with a client, one of your Equal Exes clients, who was given a valuation on an IT business, which are notoriously hard to value. Her ex-partner's valuation came in at $4 million. Her valuation came in at $12 million. Both by very reputable valuers, both with lots of letterheads and plenty of explanation why they thought their numbers were right. Ultimately, we reached a settled price, which was midway, $8 million. So a fairly common sense solution, but it was important that our client understood both those reports and what the differences were and why she felt comfortable going with a midpoint valuation.
Yeah, and both parties were happy.
Yeah,
in terms of
unhappy.
Well, that's right, slightly unhappy. I mean, if when it comes to signing a settlement agreement, I always say to my clients, if you come away slightly unhappy, that's a really good deal for both parties.
That's right.
Now, what other financial areas can you help people with in terms of who've come through the divorce and separation process?
Well, often one person will end up with a lump sum of money which they choose to invest in a range of possibly shares or property. And again, you've got some expert advisors who can help with those solutions. But at the end of the year, there's generally taxes to be paid. You're going to need help with your tax return. They can be quite complex where you've got these share investments, particularly if they're overseas. And so we can help with that. Again, investments in rental properties, we can help with those sorts of things as well.
Great, okay. So what are your two top takeaways for people?
Well, that's an interesting one because I've been thinking about that overnight. And I feel like we work together well because you bring a female perspective and I feel I bring the male perspective, and I feel that they can be quite different. And I know from experience, women generally are very nice. And at the start of any kind of settlement separation process, there's a desire to reduce conflict and to stay amicable with the ex. And unfortunately, it's my experience, especially early on in the process, especially when it comes to money, things will get bitter.
Yeah.
And so better to just take it on the chin right from the outset and accept things will get better. I mean, hopefully they don't. Hopefully things go nice and smoothly. Just generally they don't. But my second takeaway is once you've got through it all and you're probably very angry with each other and you have to speak to each other, particularly if there's children involved, these things will resolve themselves, hopefully. You move forward with your new lives and then time will heal. That's right. And, very important from a children's perspective that, co-parenting, they can get along as best as possible. It can be difficult, but, I've seen it happen many times. So as bad as things can seem right now, you have to believe that they can only get better.
Absolutely. And, best interest of the children, if you've got children, is really important. And having an amicable relationship moving forward is absolutely such a positive thing for everybody. Well, now how can people get hold of you, Giles?
Well, obviously, they can always get in touch with me through you or my website, geca.co.nz, or my 0800 number, 0800 758 766.
And you've got a booking form? People can book into
Yes, that's right. Website's got a booking form, or just contact me on my email, giles@geca.co.nz.
Great. Well, thank you, Giles, for joining me
Thank
today.
You, Brigitte.
It's really fantastic working with you and ensuring that the clients that we work with are able to move positively through their divorce and separation and end up with financial outcomes that are sustainable and enhanced for them as they move into their new beginnings.
That's right. Happy to help.
Thanks, everybody. Have a great day. And if you've got any questions, don't hesitate to reach out. Bye now.